I believe that borrowing money is the best money, especially the best money you can make online. So we all know these fancy videos of YouTubers and gurus explaining you how you can make money online. Okay, maybe you have a good paying job and you wonder how you can make some money passively besides your main job, and you come across all of these drop shipping videos and day trading videos and all these types of topics. Maybe you also found something more serious like dividend investing, but that return just alone on just dividends is maybe not as interesting to you. In this video, I want to share a very specific example with you guys how I just recently made a very boring money and how boring money is the best money that you can make, okay? So I have an example here on Colgate Palmolive for you guys, which is actually a trade I recently took. So I'm going to share this here with you guys. So Colgate actually had a very nice drop on the 8th of June, okay? And that is the perfect timing to sell a cash secured put. So we never want to sell a cash secured put when a stock is rising. We want to sell it when a stock actually dropped, and then we want to sell our cash secured put even lower, okay? And on a cash secured put, we are basically committing ourselves to possibly buy a certain stock, 100 shares of that stock, okay? We are committing ourselves to possibly buy that stock at a certain expiration date, okay? At a very specific price that we get to choose, which is going to be our strike price. So I'm going to show you guys on the chart what this Colgate drop looks in the chart. So here I'm on the chart on Colgate, and I can show you guys that Colgate was trading around $89 here on Friday when the market closed, and it basically opened up on Monday around 86. So it dropped all the way from 89 to around $86 on Monday, and that was a very, very attractive entry point to sell a cash secured put on Colgate. If I zoom out here a little bit, you guys can see where I have drawn my support line here. So that's the reason why I sold an $83 strike, okay? As we can see here, if I go on the 1 year chart, Colgate is actually not doing as much, okay? Sometimes if we take this $83, sometimes it's trading a little bit above, so maximum at 100, and the lowest is going to be somewhere around 75, okay? So I'm like right in the middle of that, and Colgate is not a highly volatile stock. It's a very, very boring stock, and that's why it is actually so interesting to make some passive income on this stock, because you literally don't have a high risk. As you guys can see, the movement is not as much. And if we look back on the chart here, the stock dropped all the way down to 86 when I decided to sell the cash secured put at 83, okay? And since then, the stock has been going up, guys. As you can see here, the stock has been going up and is going further away from my strike price. So now we are trading around $90 up here, and my strike price is all the way down here. So you guys can imagine how much I can relax on this now, because what is my risk? My risk is to buy Colgate at $83, 100 shares, and I'm very happy to do that, because if we go to Google Finance, if we jump over here to Google Finance, you guys can see that Colgate is actually paying a yearly dividend around 2.3%. Okay, so if I ever end up having to buy Colgate, I will also receive the dividend that Colgate is paying. And if we look at their finances at the bottom, we can see how stable this company is. Okay, so this is a high quality company, and I think all of us know Colgate. Probably every single one of us has bought their toothpaste at least once in their life. So we know how stable this company is, and these numbers just reflect that. And if I ever have to own the stock of this company, I'm going to receive the dividend, plus I can combine that with covered calls. So if I end up being assigned, let's say around $83, okay, so let's go on the yearly chart. If I'm going to be assigned somewhere around here, $83, I can commit myself and say, I'm willing to sell my 100 shares at a higher strike price, for example, at $90, okay? So for this commitment, I'm going to receive another premium. And if the stock ever rises to that price, I'm also going to make a huge capital appreciation between the price where I bought the stock and between the price where I sold the stock. So that's another very attractive factor on this. So as you guys know, I am the most transparent options trader. And down here I have attached for you guys a screenshot so you can see that I sold the cash secured put on Colgate on June 8th, and I collected $130 worth in premium upfront. So this money was directly deposited into my trading account, and this is a very attractive monthly salary on top of your regular income. And depending on how much capital you have, you can completely replace your monthly income with my strategy, which is called the premium cycle. Also, what is very interesting, you don't have to find more trades for more profit, okay? So if you are a business owner, or if you operate in some type of business, in order to make more money, you always have to do more work. You have to find more customers, you have to sell more, you have to advertise more. In order to make more money, you usually just have to do more work. In this case, we don't have to do that, okay? So if you want to make more money, you could have just sold 2 options contracts or 3 options contracts on this, okay? Because as we know, options come in a 100 pack. So in this account, which I'm sharing publicly with you guys, I sold 1 options contract, as you can see. So my capital at risk is $8,300, but I could have also sold 2 or 3 options contracts, and then I can multiply that $130 times 2 or times 3 or even more, depending on how many options contracts I'm going to sell. So if you want to make more money, you can just simply write you another monthly paycheck with selling another cash secured put on the stock, okay? And if we make a calculation here, we would have to divide the $130 divided by the $8,300, which is the capital at risk, okay? And that is going to leave me with 1.56% return per month, which is going to be 18.8% annualized. And that's just another very interesting factor, because I'm outperforming the S&P 500 performance, which is around 10% per year. I'm outperforming that nearly twice as much with selling cash secured puts on Colgate, which is a very, very boring stock compared to other tech companies or other high volatile companies, okay? So if this is something interesting to you, if you have capital, if you have hard-earned money, or you even have an active income through your job, but you want to retire early, or you want to increase your monthly salary with passive income, then this is the perfect strategy for you, which I am teaching you inside of my course of the premium cycle. So if you click the link in my bio, it will lead you to my community, where I have a full video course on how the premium cycle works, so you understand that in detail. And I'm also sharing my live trades there for you guys, so you can benefit from that. So if this is something that you're interested in, click the link in my bio, and I will see you there.